All right, so you wanted to take a closer look at this Narayana Hrudayalaya,
Yeah.
and you sent over their Q2 FY25 investor presentation, plus some notes from their recent board meeting.
Right.
And
Teams.
yeah, it looks like we've got some pretty interesting financial data here to dig into
Yeah.
for this deep dive.
Absolutely. We should be able to get a really good understanding of how this company's doing.
Yeah, this is going to be fascinating.
From like a financial standpoint, but also an operational one.
Okay, so like big picture first.
Sure.
Narayana Hrudayalaya is reporting a consolidated operating revenue of INR 14,000 million for Q2 FY25.
Okay.
That's a 7.3% jump from this time last year.
Right.
And a 4.4% increase from last quarter.
Wow.
So are those good numbers?
Those are very strong numbers.
I mean, it sounds pretty good to me.
Yeah. And you have to remember consistent growth.
Okay.
Especially in a sector like healthcare.
Yeah.
It's like a vital sign of a company's health. It suggests they're meeting a need, they're adapting,
Right.
and potentially even expanding their reach.
Okay, so it's not all about the numbers, though, right?
Oh, absolutely not.
You
But they're
know.
doing some pretty cutting-edge
Yeah.
medical procedures this quarter.
If you look at some of the specifics,
Yeah.
they performed 113 robotic cardiac surgeries at their Bengaluru Institute.
Wow.
Karnataka's first ever ankle replacement surgery at their Mazumdar Shah Medical Center. And they even had a case involving a 22-week-old fetus with complex congenital heart disease.
Yeah. What does this kind of specialization do for a company like Narayana Hrudayalaya?
Well, it does a few things.
I mean, it
So-
sounds impressive, but does it actually translate into financial success?
First and foremost, it improves patient outcomes,
Right.
which of course is the ultimate goal.
Yeah, of course.
But it also attracts top-tier medical professionals and really solidifies their reputation as a leader.
Right.
And that
kind of reputation absolutely translates into financial gains.
makes sense.
Yeah.
So where is all of this revenue coming from?
Okay. So yeah, let's look at the details.
Look into that a little bit.
Their investor presentation shows
Yeah.
that 70% of their revenue is from their own hospitals.
Okay.
27% comes from operated hospitals. And then a small but steadily growing percentage is coming from their heart centers and other healthcare businesses.
So they're not just like a one-trick pony.
Exactly. And it's a smart move.
Okay.
Diversifying revenue streams
Yeah.
helps mitigate risk.
Right.
It's all about having a balanced portfolio.
Okay. I like it. So who are all these patients keeping Narayana Hrudayalaya so busy? What's the breakdown there?
They've got a pretty diverse mix.
Okay.
45% are walk-in domestic patients.
Right.
29% are insured. 20% are government scheme patients.
Okay.
And then we have 7% who are international patients.
That's a pretty wide range. Does relying on so many different types of patients like that have any impact on their overall profitability
And absolutely
ability?
think about it.
Yeah.
Each patient type comes with a different payment structure,
Okay.
which can present their own challenges.
Right.
For instance, a heavy reliance on government schemes can sometimes mean delays in payments,
Okay.
while international patients may have totally different
Right.
needs and expectations.
It sounds like a delicate balancing act.
It is.
Trying to serve such a wide range of needs
Yeah.
and maintain financial stability.
Exactly. And speaking of stability,
Okay.
let's take a look at how Narayana Hrudayalaya is performing
Okay.
across different regions in India.
All right. Where are they seeing the most growth geographically?
Their strongest growth right now is coming from the Eastern Peripheral region,
Okay.
which includes Kolkata, Barasat, and a cluster of their newer hospitals.
Okay.
Bangalore and the southern regions are showing steady growth as well.
So they're not putting all their eggs in one basket.
Right.
Geographically.
Yeah. This geographic spread
Makes sense.
suggests they're strategically tapping into different regional healthcare markets to capitalize on varying economic conditions and unique healthcare needs.
So the diversifying revenue streams,
Right.
expanding geographically. What about their financial health?
Okay.
Are they actually making money?
Let's look at the numbers.
Okay.
Their consolidated EBITDA for Q2 FY25 is INR 3,320 million
Okay.
with a margin of 23.7%. And their consolidated PAT, which is their profit after tax,
Right.
sits at INR 1,988 million with a strong 14.2% margin.
Whoa. Okay. Those sound like some seriously impressive figures.
They are.
Help me put those into context, though.
Sure.
How do those numbers compare to other healthcare providers in India?
Well, an EBITDA margin above 20% is generally considered very healthy, and a PEAT margin exceeding 10% indicates good profitability.
Okay.
To make a truly accurate comparison, we need to delve into industry averages.
Okay.
But at a glance, Narayana Hrudayalaya seems to be outperforming many of its competitors.
Okay, so things are looking pretty rosy.
Yeah.
Anything else that stands out
There is one more thing.
in their financials?
Their debt-to-equity ratio
All right.
is exceptionally low,
All right.
sitting at a mere 0.08.
That sounds like a good thing.
That is a good thing.
Give me a quick refresher. Why is a low debt-to-equity ratio so important for investors?
Well, it's a sign of responsible financial management.
Okay.
It essentially means that the company isn't relying heavily on borrowed funds to operate.
Right.
This translates to greater financial flexibility, making them less vulnerable to fluctuations in interest rates, and better able to weather those inevitable economic storms.
So not only are they making these smart moves clinically, but they're also financially savvy.
Right.
That's a powerful combo.
It is a powerful combination.
Yeah, and it seems they're committed to staying on this successful path.
Right.
I mean, take the reappointment of Dr. Emmanuel Rupert as managing director and group CEO.
They highlighted that.
Right, they did highlight
in the outcome of the board meeting.
in their board meeting notes. Didn't he already hold that position?
He did.
Okay.
He's been with them since 2000,
Wow.
holding several key leadership positions.
Okay.
The board specifically mentioned his success in guiding them through the COVID-19 pandemic,
Yeah.
leading a financial turnaround, championing clinical excellence, and embracing cost management and new technologies.
It sounds like they're doubling down on his leadership.
Yeah.
What does that tell us
It points to a commitment
about their future direction?
to their existing winning strategies.
Okay.
Those clinical advancements, cost efficiency measures,
Right.
and that digital transformation they've been pushing.
Yeah.
We might see continued expansion and further innovation under his guidance.
Okay. That's exciting stuff. But I also noticed that they're not just focused on profits.
Yeah, their ESG vision caught my eye as well.
Yeah, their ESG vision, health for all.
Health for all.
That caught my eye.
It is ambitious.
It sounds pretty ambitious.
Yeah, it outlines their commitment to environmental, social, and governance factors.
Right.
Those ESG principles that are becoming increasingly important to investors these days.
Okay, so break that down for me.
Sure.
What are some specific examples?
They've set some pretty bold targets.
Yeah.
Training over 25,000 healthcare professionals by 2030.
Wow.
Achieving carbon neutrality by 2040. And slashing their paper use in half by 2025.
Okay, and why does it matter to investors?
Well, investors are paying more and more attention to these ESG factors because they're looking for companies that align with their values and contribute positively to the world.
So it's not just about profits anymore.
It's not just about the profits anymore.
So it sounds like Narayana Hrudayalaya is hitting all the right notes.
It's a compelling picture.
Strong growth, impressive profitability, investing in the future, and they're committed to making a positive impact.
No doubt.
It's pretty impressive.
But as with any deep dive, we need to look beyond the surface and consider all angles.
You're right.
Yeah.
We can't just get swept away by all the good news.
Exactly.
What are some potential risks?
Well, for one, we need to think about the ever-changing healthcare landscape.
Yeah.
Things like evolving regulations, disruptive technologies, and even shifts in patient needs could significantly impact their future performance.
It's like they're navigating a constantly shifting maze, even if they're crushing it right now.
That brings us to some key questions we need to explore further.
Hit me with those brain-tickling questions.
Okay. Well, with all this emphasis on digital transformation, I'm particularly curious about how they plan to ride the wave of telehealth and personalized medicine. Are they positioning themselves to be leaders?
Interesting.
Or are they lagging behind?
That's a really good question.
Yeah, their investor presentation mentions.
That's some digital initiatives.
Some digital initiatives and that patient app.
Right.
But it doesn't really give us the full picture.
Right. With healthcare, increasingly.
With their telehealth strategy.
Shifting towards remote and personalized care. It's crucial to understand how they're adapting and planning to compete.
Definitely something to keep on our radar.
There's also the matter of their international revenue.
Okay.
Right now, it's just a sliver of their overall business.
Yeah.
But they did mention expansion plans.
They mentioned a pipeline
Maybe their investor presentation.
for the Middle East and Southeast Asia being underway. Yeah. Could that be a game changer for them?
Yeah, I'm curious, could that be a game changer?
A major growth opportunity.
Major growth opportunity.
It certainly has that potential.
Yeah.
But we need to be realistic.
Right.
Expanding internationally comes with its own set of challenges.
Of course.
Different countries have different regulations,
Right.
different healthcare systems,
Of course.
different cultural norms.
Yeah, so many things to consider.
To name just a few.
So the million-dollar question is,
Right.
are they truly equipped to navigate those complexities
Yeah.
and replicate their success in these new markets?
That's exactly what we need to figure out.
You've given me a lot to think about.
Oh!
We've only just scratched the surface, haven't we?
We've only just begun our deep dive.
Okay, so we're back and ready to really get into these financials.
Let's dive deeper.
For Narayana Hrudayalaya, where do we even begin?
A good place to start is
With all these numbers?
their consolidated statement of cash flows. This gives us a dynamic view of how the company is generating and using its cash.
Okay.
So for the 6 months leading up to September 30, 2024, their net cash generated from operating activities was a solid INR 3,818.97 million.
So they're bringing in a good chunk of change.
Precisely.
Just from running their core business.
That's a very positive indicator.
Okay.
It suggests they're efficiently converting profits into actual cash, which is crucial for things like reinvestment, debt reduction, and overall financial stability.
It's like the fuel that keeps the whole engine running.
That's a great analogy.
Yeah.
But let's not forget about their investing activities. They've been allocating significant capital expenditure towards things like facility upgrades, new medical equipment, and even investments in land, hospital construction, and new clinics.
So they're not just hoarding cash. They're actively plowing it back into growth opportunities.
And while their net cash used in investing activities for the 6 months was INR 1,610.68 million.
Okay.
This is actually quite common for companies that are focused on expansion.
Okay.
They're strategically deploying capital to enhance their infrastructure, broaden their reach.
Makes sense.
And ultimately stay ahead of the curve.
Yeah, you can't just stand still if you want to keep growing.
Right.
Now, what about their financing activities?
Okay, so
are they swimming in debt?
They've been quite proactive in managing their debt.
Okay.
Their consolidated total borrowings, after subtracting cash bank balances and investments, stood at a very manageable INR 2,684 million as of September 30, 2024.
Okay.
This translates to that impressively low net debt-to-equity ratio of 0.08 we talked about earlier.
Okay, we touched on the benefits of a low debt-to-equity ratio, but I think it's worth breaking it down a little bit further. Why is this such a crucial metric?
That's a reassuring sign
For
investors, because it suggests that the company isn't overly reliant on borrowed money to keep the lights on.
Right.
This translates to greater financial flexibility.
Yeah.
They're less vulnerable to those pesky interest rate hikes, and they're generally better equipped to weather economic downturns.
So it's basically a big green flag waving in the wind, signaling financial prudence and stability.
And when we look at their cash flow statement, we see that their net cash used in financing activities for the 6 months was INR 1,721.86 million. A big chunk of that went towards dividend payments and repayment of long-term borrowings. So
it sounds like they're striking a good balance between
their commitment to responsible debt management,
investing for growth, keeping their debt in check, and rewarding their investors.
They seem to be juggling those priorities quite effectively.
Okay, good.
It's also worth noting that their approach to capital expenditure is quite strategic.
Okay.
They're not just throwing money around haphazardly.
Right.
They're focusing on maintaining and upgrading existing infrastructure while also strategically expanding their capacity and capability.
So they're fixing the roof while the sun is shining and building new rooms for more guests.
This balanced approach ensures they're keeping their current operations running smoothly.
Okay.
While also laying the groundwork for future growth.
That brings us to the mystery of the Cayman Islands subsidiary.
All right.
We got a glimpse of its performance in the materials you sent, but it left me with more questions than answers. What's the story there?
So their Cayman Islands facility,
Yeah.
which they call Health City Cayman Islands,
Mm-hmm.
contributed a respectable U.S. $31.9 million in operating revenues
Okay.
for Q2 FY25.
Mm-hmm.
That's a fairly stable performance
So it's a steady contributor to their overall revenue.
compared to the previous quarter.
But is it actually profitable?
That's where things get a bit murky.
Okay.
While their investor presentation highlights the revenue, it doesn't dive into the specifics of profitability
Okay.
for the Cayman Islands facility.
Mm-hmm.
To get the full picture, we'd need to really scrutinize their consolidated financial statements and segment reporting.
It makes you wonder.
Yeah. What's their rationale?
What's their strategic rationale for operating in the Cayman Islands in the first place?
The Cayman Islands is known for its favorable tax environment, which could certainly be a motivating factor. However, Narayana Hrudayalaya also emphasizes their commitment to making quality healthcare accessible globally. It's possible they view the Cayman Islands as a strategic location to cater to a specific patient demographic or offer highly specialized services that might not be readily available elsewhere.
It sounds like there's more to this Cayman Islands operation.
It meets the eye.
Yeah, we might need to do some more digging.
We might need to do a little more digging.
To uncover the full story.
Uncover the full story. What about their plans to expand into the Middle East and Southeast Asia?
To expand into the Middle East and Southeast Asia.
Any more insights there?
Unfortunately, details on those ventures are still pretty scarce.
Right.
It seems like their international strategy is a bit of a puzzle right now. They're clearly signaling their interest in expanding into these new markets. But we need more information to assess the potential risks and rewards.
So it's a bit of a wait-and-see situation when it comes to their international ambitions. We'll have to keep an eye out for more details in future reports. For now, let's shift gears and zoom in on some key financial ratios and indicators that investors should be paying attention to. What should we be focusing on? Their consolidated EBITDA margin of 23.7% for Q2 FY25 is definitely a highlight.
Yeah, we talked about that.
As we discussed earlier.
That sounds pretty good.
It indicates strong operational efficiency and profitability. However, it's important to compare this margin to industry averages and their own historical performance to assess if it's truly sustainable.
So it's not just about the number itself.
And indicative of a competitive advantage.
But where it sits in the grand scheme of things.
Exactly.
What else should we be looking at?
We also need to consider their patient mix. And how it impacts their average revenue per patient, or ARPP. A shift towards more insured patients or international patients who typically pay higher fees could boost their ARPP and overall profitability.
That makes sense. What about those government scheme patients?
Well,
do they kind of bring the average down?
Government schemes tend to reimburse healthcare providers at lower rates compared to private insurance or out-of-pocket payments. So a large proportion of government scheme patients could potentially put downward pressure on their ARPP.
It's a delicate balance.
It is.
They're committed to serving a diverse patient population, which is commendable. But they also need to ensure their financial sustainability.
Of course.
In the long run.
Exactly. What other
financial metrics?
Financial metrics are giving you clues.
They're giving you clues about their overall health.
Another key indicator is their operating cash flow margin. This tells us how much cash they generate from their core operations relative to their revenue. A higher operating cash flow margin generally indicates a more efficient operation. Meaning they're effectively converting their sales into actual cash.
So it's a measure of how well they're turning profits into cold, hard cash.
And for Q2 FY25, their operating cash flow margin is looking quite healthy. Which suggests they're doing a good job of managing their working capital. This means they have more cash available for reinvestment debt reduction or even distributing it back to shareholders.
So financially, they seem to be on pretty solid ground.
They seem to be.
But I guess we can't just focus on the numbers.
We have to.
We need to think about the bigger picture too,
Factor in their growth strategy, ambitious CapEx plans, their international aspirations, and the competitive landscape they're operating in.
Of course.
The numbers alone don't tell the whole story.
And that's where our deep dive expertise comes in handy.
Precisely.
We're not just crunching numbers.
Right.
We're trying to understand the story behind them.
We're giving you the tools and insights to assess the company's performance, weigh the risks and opportunities, and ultimately draw your own conclusions.
It sounds like...
Narayana Hrudayalaya is a well-managed company with a strong track record of growth, profitability, and responsible financial stewardship.
Right.
They're clearly committed to innovation. And they're strategically investing in areas with high growth potential.
Right.
But there's still some unanswered questions.
There are some unanswered questions.
Especially when it comes to their international plans and their approach to,
when it comes to
those game changers like telehealth and personalized medicine.
Those game changers like telehealth and personalized medicine.
Are we ready to wrap this up?
Not quite yet.
Okay.
Those lingering questions are exactly what we'll be tackling in part 3 of our deep dive.
Okay.
We'll explore their growth strategy in more depth, trying to determine whether Narayana Hrudayalaya is truly a compelling investment opportunity.
Okay, now I'm really intrigued.
We'll dive back in soon. Okay, so we're back for the final part of this deep dive into Narayana Hrudayalaya.
Yeah.
We've covered a lot, but there are still some key questions about their growth strategy and
and how they're
approaching these big disruptions that are shaking up the healthcare industry.
Yeah.
We saw that they have like a clear appetite for expansion, both within India and on the international stage.
Yes.
We talked about their interest in the Middle East and Southeast Asia.
Right.
And then there's that whole digital transformation push they're highlighting.
Yes. They're investing in
their presentation.
Mobile apps for patients.
Okay.
They're streamlining patient flow within their facilities.
Right.
And they're even piloting a new outpatient access control system.
So they're not just building new hospitals. They're also embracing technology to boost efficiency and reach more patients.
Exactly. It's a smart move.
It's a smart move, right?
It has the potential to be a real game changer for them.
Okay.
Especially in such a competitive market. But it also raises some important questions.
Okay, like what?
Are they integrating these digital tools effectively into their existing operations? Are they truly transforming the patient experience?
Right. Are these just like superficial upgrades?
Or are they just checking those boxes?
Yeah, exactly. How do we know if they're actually measuring success in this digital realm?
That's where we need to look beyond the headlines.
Okay.
And dig into how these initiatives are impacting key metrics like patient satisfaction, operational costs, and ultimately revenue growth.
Okay, so digital transformation is one piece of the puzzle.
Right.
We also talked about their focus on specialized healthcare services.
Yes, we saw those impressive examples.
We saw those examples of robotic cardiac surgery. Ankle replacements, and even that incredible case of treating a fetus with that complex congenital heart disease.
It's amazing.
It's amazing what they're doing clinically.
What they're doing on the clinical side.
But does this specialization can sometimes create vulnerabilities?
Come with any risks.
If demand for those niche services drops or new technologies emerge, they could find themselves in a tough spot.
So how are they mitigating that risk?
Well,
Are they diversifying their offerings?
That's a great question.
Are they staying ahead of the curve?
We need to assess.
By investing in these cutting-edge treatments and technology.
Yeah, it's like they're walking a tightrope. They need to be leaders in their niche, but also like agile enough to pivot when needed.
That's a great way to put it.
Yeah.
And that adaptability is crucial, especially with these disruptive forces like telehealth and personalized medicine on the rise.
Yeah. Remember those key questions we talked about earlier?
Yes. Is Narayana
Hrudayalaya positioning itself to be a leader?
Positioning themselves to be a leader in these areas.
In these areas? Or are they at risk of falling behind?
Right. Their investor presentation mentions that patient app.
Right. They mention the app, which could potentially be a platform for telehealth services, but
we need more details.
We need more details. What's their overall strategy here?
Exactly. Are they investing in remote monitoring technologies?
Okay.
Are they developing virtual care programs? Are they partnering with other healthcare providers to expand their telehealth reach?
It's the difference between just dipping their toes in the water and taking a full-on plunge into the future of healthcare.
And then there's personalized medicine.
Right.
Are they exploring genomic testing?
Mm-hmm.
Are they using data analytics
Okay.
to create those tailored treatment plans?
Yeah, these are the kinds of advancements
Right.
that could really set them apart from the competition and
Yeah.
solidify their position as true innovators
Exactly.
in the healthcare industry.
Without clear evidence of their commitment and investment in these areas,
Mm-hmm.
it's tough to gauge
Okay.
their long-term competitive advantage.
So it seems like they're taking steps in the right direction with their digital initiatives and specialized services.
Right.
But there's still this cloud of uncertainty hanging over their ability to really navigate these emerging trends and these disruptive forces.
I agree. And that uncertainty should be a factor in any investment decision.
So where does this leave us?
Well,
what's the final verdict?
Based on what we've seen in their
Narayana Hrudayalaya. Are they a buy, a sell, or a hold?
Q2 FY25 performance and the Tamales available.
Okay.
They seem to be a fundamentally strong company with a proven track record of growth, profitability, and responsible financial management.
They've shown a willingness to embrace innovation?
They have. They've shown a willingness to embrace innovation.
And clinically and operationally.
Both clinically and operationally.
And they're strategically investing in these high-growth areas of healthcare.
Right.
However,
but those unanswered questions.
Those unanswered questions about their international expansion. And their approach to those game changers.
And
they pause.
Give us pause. It's not a slam dunk.
It's not a slam dunk.
So it's a bit of a mixed bag.
Is
a blend of reasons for optimism and a healthy dose of caution. It really comes down to each investor's individual assessment, doesn't it?
Absolutely. It's up to each investor to weigh the pros and cons, conduct their own thorough research, and ultimately decide whether Narayana Hrudayalaya aligns with their investment goals and risk tolerance.
That's the real value of these deep dives, isn't it?
Exactly. We're not here to give you a simple yes or no answer.
We're equipping you.
We're equipping you with the knowledge and the insights.
With knowledge and insights.
To make those informed decisions yourself. Well said. And as always, we'd love to hear your thoughts.
Yes.
Share your insights and perspectives with us.
Please do.
And keep those questions coming. Join us next time for another deep dive into the fascinating world of business and finance.
Until then, happy investing.